Over the last week, global M2 hit a record-breaking $108.4 trillion, and honestly, no one seems to be talking about the potential upside here for our crypto altcoins. Now, this is one of the biggest moves we've seen in global M2 in years, and everyone seems to be distracted right now about Trump's tariff situation and Powell's bloody rate cut delays. It's just crazy because smart money is positioning for what could be the most explosive move we've honestly witnessed this cycle. The last time global M2 spiked like this, guys, Bitcoin went absolutely parabolic, and this time it's even bigger. China's M2 money supply has surged to a staggering 326 trillion yuan, equivalent to about 45 trillion US dollars. This is all playing into a much larger 4-year global liquidity cycle in which we're near enough now to begin experiencing mass global liquidity growth, which of course will trickle down into Bitcoin and altcoins. Don't you worry, I've got some of those altcoins I'm going to mention here in just a moment, because in my opinion, they're likely going to skyrocket when this massive liquidity wave eventually hits the crypto market, thanks to their quality and, most importantly, guys, the AI and real-world asset narratives that they are in. Do not forget, though, if you find yourself enjoying this video, to hit that like button and, most importantly, subscribe. I'm starting a new weekly series here where I'm bringing you 3 up-to-date news videos to keep you the most informed in this market. So to be on top of things, make sure you subscribe, but hit that bell notification as well. Otherwise, you might miss one of these very important videos. As I mentioned, the global M2 money supply has just hit a new all-time high of around 108 trillion US dollars. For those who don't know, the global M2 supply is essentially just liquid cash floating around the global system, which includes cash, checking deposits, and easily convertible money. You can kind of think of it like the stablecoin market cap, but for the traditional fiat system. Now, this large spike was largely caused by China's M2 supply actually surging to an equivalent of 45 trillion US dollars at a rate of about 7.5% year over year. This is absolutely critical for crypto because, historically speaking, Bitcoin has always shown an incredibly strong correlation with global liquidity. When M2 goes up, Bitcoin, of course, soon follows. It's one of the most reliable forward-facing indicators we actually have in this market. Now, I personally use about a 108-day lead for global M2 because it's the best mathematical fit for Bitcoin's price as of right now. And as you can see, we're actually consolidating at the same point global M2 was here, which means we could be in for a little bit more volatility before experiencing the tsunami growth to follow. But here's where it gets really interesting. While we're seeing this massive surge in global liquidity, what we're also dealing with is Trump's tariffs and the Fed's reluctance to cut rates. This creates a unique situation where we have 1, massive liquidity entering the system, 2, economic uncertainty from the tariffs, and 3, high interest rates maintaining the pressure. Now, it's this combination that historically drives investors towards hard assets like Bitcoin as a hedge against both inflation and economic uncertainty. This is why we're seeing gold rocket to all-time highs as well, as it's recognized as being even safer than Bitcoin, at least many may argue for now. So with this information on board, what I need everyone to do right now is pay very, very close attention to this ascending channel we are in right now. As you can see, throughout Bitcoin's entire history, we've always been in this ascending channel, and when we break out of it, that is the start of alt season. At that exact moment, we have Bitcoin's dominance breaking down, which means altcoins begin going up. At that exact moment, back in 2017 and back into 2021, the Dixie, the US dollar, begins to collapse at that same time as well. So it's a combination of things that we are beginning to see right now amongst the macro uncertainty. So take that information and keep a very close eye on what Bitcoin does next. Now, let's talk about something that flew, I think, under most people's radars, but could be an absolute game changer for crypto, and that is Fed Chair Jerome Powell's recent comments about easing crypto regulation. Federal Reserve Chair Jerome Powell indicated that regulations for cryptos will become less stringent as the sector matures, signaling a potential shift here in the central bank's approach to digital assets. Now, if you ask me, this is absolutely huge, and I've made my fair share of videos talking about this. But to understand why, we need to look at exactly how the Fed influences crypto markets. While many people don't really realize it, the Federal Reserve actually does exercise significant oversight over US banks that engage with crypto assets. They don't directly regulate cryptocurrencies themselves, but what they do is control how banks actually interact with them. This has obviously been a major roadblock for institutional adoption because banks have just simply been hesitant to engage with crypto because of these exact strict requirements. But now, guys, Powell is signaling a shift in this approach. As the crypto sector does mature, and it's maturing at a very rapid rate actually, these regulations are of course just going to become less stringent, potentially even opening the floodgates for banks to offer crypto services to their customers. This is, and I need to really emphasize this, a very significant step because stablecoins are the backbone of the crypto economy. You know, this has about $230 billion in market cap, and it's growing fast, guys. So obviously, the more money you have floating around in crypto, the more it's likely to land up in your favorite altcoin.
There's two bills that are currently being discussed in the House and Senate. The one that's most likely to pass in the next 60 to 90 days is the stablecoin bill. And then the second one's the market structure bill. Once those two bills pass, Apple, Microsoft, Google, Facebook are going to say, hey, we're crypto people now. And so they're going to put wallets in their platforms because they can capture an enormous amount of the market. And when they have those 3 billion users, it's like they have cryptocurrency wallets because they now can legally hold stablecoins and use stablecoins. They're going to do it because they don't like paying the processing fees on credit cards. So that's what's going to bring the value flow in because the users already are wired into that system. Their money's already there. Their credit cards are already there. Once these two bills pass, that opens the floodgates, and that's 3 billion people that enter in.
And I've got some really good news. As this chart shows, we've just had something happen that has only happened twice in this whole entire bull run. And as you can see from history, it sent Bitcoin flying once it happened. This is the SSRO chart. It's stablecoins versus Bitcoin. And when stablecoins gain enough strength and momentum over Bitcoin, pushing this price beneath the midline, what you have soon after is a massive explosion in Bitcoin's price because stablecoins have given Bitcoin enough momentum to keep sending it higher and higher. When this chart is in the top half, in the red, that means that stablecoins can no longer keep pushing Bitcoin higher and higher because the price increases. So I want you to think about this for a second. What does this actually mean with the combination of the record empty money supply? Well, one, we have more money in the system than ever before. Two, a Fed that's becoming more crypto-friendly. Three, a clear framework for stablecoins on the horizon. Again, more money. And lastly, the dollar. Yes, the US dollar is falling right now at a faster pace than 2017 and 2021. Obviously, very good for risk on markets. So guys, I mean, this is the perfect storm for Bitcoin to break the ascending channel and cause an alt season. While this all sounds great, okay, and while Powell is talking about easing regulations, the Fed is still holding firm on not reducing interest rates. Now, in his most recent comments, Powell indicated that the Fed isn't rushing to cut interest rates despite Trump's pressure. So Trump, it seems, is at his wit's end when it comes to Fed Powell because at this point, he's even threatened to fire him. Yes, it's getting that crazy. He's tried the easy way, so to speak. He's tried the hard way, and now it looks like he's trying his last straw. But when we actually look at Trueflation's data, which is the actual data that is coming out via inflation in real time, inflation is actually falling even with the tariffs somewhat in place. This suggests that tariffs may be deflationary, contrary to popular opinion. If inflation continues to fall at this rate, the Fed is eventually going to have to cut rates. Because don't forget, the market is still expecting 5 more rate cuts this year according to the CME Fed Watch tool. Now, let's just take a quick look at the technical picture for Bitcoin for the last few days because the charts are telling us something really important right now. Bitcoin is seeing an extraordinary conviction from the big money crowd. We're talking about the smart money because in the last 24 hours, guys, over 38,000 Bitcoin poured into long-term accumulation addresses. All in all, whales have accumulated over 65,000 Bitcoin while price dipped below $80,000, with on-chain data showing significant buying pressure from large holders despite the recent market volatility. So the question is, what do they know that we simply don't? On exchanges, funds are steadily moving to cold storage, with exchange outflows reaching a net 47,127 Bitcoin in the past week, a classic sign of accumulation rather than distribution. Meanwhile, the crypto fear and greed index sits in the fear zone still, which is around about 31 out of 100, showing retail investors remain cautious despite the strong on-chain signals. In moments like this, guys, when smart money is simply pouring in while retail is fearful, history. And all we can go off is history tells us that the odds favor patient accumulation for the long run. Now, let's get to what everyone's been waiting for. The 5 altcoins I believe are positioned to absolutely explode when this liquidity tsunami hits the market. Now, these are coins with strong fundamentals, real-world adoption, positioned in the hottest narratives right now, and guys, most importantly, they are all US-based. We're hitting every single target because that is the safest thing to do in a market when everything seems to be so uncertain. Go to the best coins, hedge your risk that way. First of all is HBAR. Now, HBAR is making massive moves in the real-world asset tokenization space that almost no one's talking about. Just last month, the HBAR Foundation joined the ERC 3643 Association to boost real-world asset tokenization. But what's really exciting is their new HashSphere launch, a private permission network for regulated enterprises that maintains the interconnection with the public Hedera ecosystem. This is an absolutely huge win for Hedera for institutional adoption. They've also partnered with Dell Technologies to record real-time edge infrastructure data on the Hedera consensus service, integrating AI for trusted, auditable data. And if that wasn't enough, Hitachi also joined the Hedera Governing Council as its 32nd member, strengthening their foothold in Asia. With these major enterprise partnerships and their focus on RWAs and even AI data use cases, HBAR, in my opinion, is definitely positioned well to capture the incoming liquidity wave. Coin number 2 here is Render, and Render is by far one of my top AI plays in crypto right now. The Render network just approved 3 game-changing governance proposals. Basically, they are preparing to really onboard AI use cases. They've also just hosted RenderCon 2025, their first in-person conference in Hollywood, featuring keynotes from Jules Urbach, the founder and CEO of Render and Atoy, and their major partners like NVIDIA. In my opinion, there's a lot of catalysts due to come out of RenderCon, and once the dust settles, I do think we're about to see some crazy updates. With AI being one of the hottest narratives in crypto, I think for this bull run, the fact that the US dedicated a $500 billion investment fund for onshore AI companies and NVIDIA's recent $500 billion commitment to producing GPUs in the US, it is safe to say a coin like Render in both AI and US-based companies is definitely positioned to capture a significant portion of the incoming liquidity. Coin 3 is Ondo, and if you're looking for a coin at the very intersection of DeFi and real-world assets, Ondo possibly could be that coin. They've recently partnered with MasterCard's multi-token network to integrate their short-term US government treasuries fund, enabling businesses to tap into tokenized treasuries with reduced settlement delays. They've also formed a strategic partnership with Trump's World Liberty Financial to integrate Ondo's tokenized assets into their treasury reserves, following a $4.7 million USDC investment and the launch of the Ondo chain, created alongside BlackRock, Morgan Stanley, Franklin Templeton, and others. With their newly announced and soon-to-be launched Ondo Global Markets platform providing on-chain stock and bond exposure and their deep ties within the stablecoin market, Ondo is by far one of the best altcoins positioned to capture the institutional money that's about to flow into crypto. And lastly, Chainlink. Now, in my opinion, Link's been crushing it in Q1 of 2025. They've integrated 37 new blockchains, deployed over 77 data streams, launched smart value recapture with Aave, and introduced self-serve CCIP token onboarding. Chainlink's co-founder Sergey has even been engaging with US policymakers at the White House Summit on Digital Assets and the DC Blockchain Summit, reshaping the very legislation for crypto and accelerating regulatory acceptance for this industry. He's really doing us a lot, guys. He's at the very, very pinnacle of crypto adoption. Now, the Chainlink network has also surpassed $20 trillion in total value enabled, driven by widespread adoption of its data feeds and cross-chain services in DeFi and TradFi. Chainlink is, guys, absolutely positioned to benefit enormously from what is about to come here with stablecoins and the market. So that's going to do today's video, ladies and gentlemen. Thank you so much for watching. Let me know you made it this far, by the way, with a like down below. And remember, if you want up-to-date news with plans, strategies, exit levels, predictions, and the whole lot, check out the No BS Crypto Vault below. Make sure you are subscribed, and I look forward to seeing you tomorrow. Take care. Bye-bye.